Historically, when you look at periods of a significant financial speculation, and I would categorize the current period that we're in as one of those periods, what has been a necessary condition is a move towards tightening. So any time the market has been able to sniff out the possibility that the punch bowl gets removed has caused more than just a little bit of a wobble. I would suspect that given the financial fragility that has been built up, the enormous amount of debt in the system, misallocation of capital, zombification of the economy, that it would now be sufficient to cause concern in risk assets that we have an absence of liquidity. So stock versus flow. We might have a much higher balance sheet, say, with the Fed, 7 trillion, but the fact that we're not seeing a marginally positive rate of liquidity increase is actually causing the market some concern, and that's being reflected in the fact that we have recently seen wobbles right across the board and an inability to rally.
Aside from monetary loosening, there's definitely need for a bit more targeted fiscal stimulus. Speaking on China, I think given the increased tensions between the U.S. and China, China feels the need, right, to ramp up R&D in order to spur innovation in digital infrastructure. So going into the next 5 years, we are of the view that China will use tax waivers and a lot more policies to promote better R&D spending trends to catch up on the learning curve. And it's not just for semiconductors, for a lot of the technologies out there, they wanted to become more self-sufficient.
I don't think the world is ready for a tightening of fiscal support. I think that the world still needs fiscal support because we're still playing whack-a-mole with this virus. Yes, people have a little bit under control, but you're seeing everywhere that a country tries to reopen or, for example, open international travel, the virus spikes up. So until there is a truly widely accepted and globally standard protocol treatment and vaccination, which could be at least 2 years, maybe 3, you're going to continue to have this up and down. So as much as people are talking about tightening, I don't think it's going to happen yet. Definitely not. I don't think they'll be able to. It's a great idea, but we're not there yet. Everybody needs support to get through this period.
We have been seeing a lot of stimulus coming through in terms of risk assets, and I think we have just seen overnight that rates are lower for longer as well. So I think we got to look at how the recovery of the economy would look like going forward in the next few quarters. And then we'll see whether the central bank will add more stimulus across countries. And obviously the different drivers within each economy in Asia would result in a different stimulus action.